Let's put the spotlight on the FMCG earnings. We've got earnings over the last couple of trading sessions from HUL, we got it from Dabur, Asian Paints, Colgate, Varun Beverages, what have you. The entire gamut of numbers that came in. Abneesh Roy, who's the Executive Director at Nuvama Institutional Equities, joins in. Abneesh, a two-part question. One, this quarter shows signs of inflection where price growth has come by, things are looking good, margins have been protected. But on the other side, the price moves, they're so not in line with the kind of numbers that have come by. I mean, what explains a 7% downtick that we saw on HUL on a mild volume base, and the subsequent day there was a big up move? How do you explain this to your clients? Because anytime these numbers flash on the air, we say it's in line and the stock is down about 4-5%. We don't necessarily look very wise.
Yeah, hi, good morning. Thank you, Mangalam. Great question. So yes, I think that is opportunity to add such stocks. You are absolutely right. There was the FNO pre-positioning in such cases, in my view, and there is also sometimes some irrational expectation because Nestle, I think, results were very strong. It bet expectation. Bajaj consumer results bet expectation. So I think there is always that element also. But definitely, I would like to break up my coverage into three spaces from a recommendation perspective. One is, of course, the compounding stories. So Nestle, Pidilite, Radico, etc., Marico. These four stocks are compounding stories. Second will be, of course, valuation comfort plus reasonable recovery. There, I would like to pitch Colgate, Hindustan Unilever as the top ideas there. And third will be the reform space. So clearly, Alcobev, a lot of reforms happening. In my view, Tamil Nadu, which is one of the largest market, there clearly TASMAC privatization is starting. I think all the Alcobev companies will benefit. There's a UK FTA benefit. There's a Karnataka tax reforms in Alcobev. So these three are the buckets we would like to pitch stocks to the investors. But you are absolutely right. The 6-7% got reversed largely in HUL yesterday. Varun Beverage also. So Asian Paint also yesterday strong numbers, but I think yesterday crude was up 6-7%. So yes, we are positive on most of the companies, but definitely Asian Paint and all paint companies will see strong numbers in Q1 and Q2. So we are positive on the paint space overall also.
The management of Asian Paints said that they believe they grew faster than the market in the first quarter. Do you back Asian Paints right now, or do you continue to back Berger because the Bengal revival theme and perhaps continuing to stay stronger?
No, I think entire space will see recovery. Even Indigo Paints, which is a very small paint company, will see very strong numbers in Q1. Even Birla Opus will do well. I think the industry, the issues are behind us. So I think everyone will see broadly definitely 15 to 18% sales growth across the board in Q1 and Q2. Yes, you're right. Berger will see the additional benefit of Bengal revival. That plays out over the next 2 to 3 years. So we like all the companies, but definitely whenever recovery happens, the number one player takes market share. So I'm not saying only in Q1, but definitely the 20% local players in paint, they will lose market share because crude is so volatile, and now Asian Paint has got the VAM-VAE facility also. So the kind of strength we are seeing in the body language of Amit Single, I think that is on the stronger side versus what we have seen in the past. So yes, we like all the companies, but Asian Paint definitely will gain market share from local players.
Interesting. You said you read income statements and balance sheets, and now you're reading the body languages as well, Abneesh. What about the tobacco companies? I mean, the state was expecting some sort of resilience to happen. That hasn't happened in the first quarter. Godfrey Phillips saw a volume decline. We saw a decline for VST Industries as well. And tomorrow, ITC is reporting its numbers. Do you think the worst is priced in, or maybe these will continue to languish?
I think worst is priced in because next 2 to 3 years, my sense is the Modi government will not increase the taxation too much. Because if you see the last 10 years history, only in 1 year we saw very sharp taxation increase, which is behind us. Yes, Q1 results for ITC will be weak tomorrow, but I think that's largely factored in, and definitely in Q2, you will see gradual bouncing back. Yes, next 2-3 quarter, cigarette volumes will be negative for ITC, but every quarter you will see some recovery in terms of the volume decline. So from a high single-digit volume decline gradually, I think by Q4 we should see close to low single-digit decline. Similarly, in terms of EBITDA decline also we'll see that same benefit. So I will say that yes, valuation comfort is very high, but someone has to take a 1 to 2 years view on cigarette stocks. Plus dividend yield is also 5%. So we are positive on ITC more from a 1 to 2 years perspective, but near term you will see that maybe some more time correction can happen, but valuation comfort is very high.
I'm not sure if you track the hospitality space, Abneesh. ITC Hotels, if you have that under your coverage, because the stock from about 250 thereabouts has fallen to about 160, and the hospitality theme, the structural theme, is pretty much fairly underway right now.
So I don't cover that space, but if you are asking on that kind of consumption, we'll prefer Alcobev there, because clearly in terms of the urban consumption, Alcobev will capture the reforms, etc. Tamil Nadu TASMAC reforms, Karnataka tax reforms, UK FTA. So I'll not be able to comment on hotel space, but definitely we'll play the urban consumption through the tax reforms in the liquor. So we like United Spirits, Radico Khaitan, Allied Blenders. We have a buy on all three.
Abneesh, morning. Just one quick question. I know you don't cover quick commerce, but there's this big thing which is going on. I'm sure this Zepto IPO valuation, big difference between what's on offer, what's the ask, etc., whether it'll be deferred. I mean, what we understand is that the management is sticking to its gun, saying, well, no deferment. We'll see. How do you see this? I mean, one way or the other, does this directionally mean lesser competitive intensity, not just for other QC players, but perhaps for the FMCG companies, even Avenue Supermarts, for example? I mean, is there a broad read-through from this, that the market is ascribing wants to ascribe lesser valuation multiples to a new company trying to IPO?
Sure. So I'll not be able to comment on that space, but definitely from a Avenue Supermart and FMCG perspective, I think the competition in the Q-commerce will sustain, because Amazon now, Flipkart minutes are very aggressive, which was not the case, say, 1 year back. So that is good for definitely FMCG companies. If you see even Hindustan Unilever, so very strong growth in the e-commerce, quick commerce across the board we are seeing. So that means that even for Avenue Supermart, the same store sales growth will be a challenge. They already pointed out that in the annual call. So definitely FMCG is a good way to play the rivalry in Q-commerce, because they will keep funding a lot of that growth, and there'll be less bargaining power because that's a fragmented space. So yes, FMCG will gain because of that, but definitely competition in Q-commerce is not going away. You can't see just one listed likely IPO, because Amazon and Flipkart definitely are global companies, and they are very aggressive on this space in India.
All right, take that point, Abneesh. Thank you so much for joining in. Just before we let you go, any final thoughts that you have? There are a bunch of numbers that have come by. There are a number of stocks which are currently at near 7 to 10-year lows. We've seen, the price at which HUL is. The last time was available at the same time in April 2019, pre-pandemic. ITC, June 2017. Imami, the last time we saw a similar price was close to about 11 years ago. So it's a bit of a lost decade. Do you think that these are value traps right now, or maybe it's a good opportunity to enter for the next decade?
So 4 key things. Yes, these are good time to buy some of these. So out of these, I'll prefer HUL and Colgate for sure, because of 4 reasons. Our sense is because of the Korea and Taiwan sell-off, I think India will get some benefit, and a lot of the large caps will get that FI benefit inflow. Second, of course, is inflation is good for large companies. They gain market share. Their pricing growth leads to operating leverage also. Third, of course, valuation, as you have already highlighted. But more importantly, I think El Nino is too much of a unnecessary overhang. We have analyzed the data. Companies have addressed that issue also. Only 15% of the rural GDP is now linked to the agri, right? So, and definitely a lot of subsidies are there. So I will say that HUL and Colgate will come back to glory. I think and plus the D2C startup space also, these companies are now participating, and we are going to see a lot of M&A in that space in favor of the large listed companies.
And Colgate will come back to glory. That's something that we'll take away from this. Thank you for joining in, as always, Abneesh. With that, let's go across to